CEO and we just started the recording now. No worries. I'm going to hit okay. I'll start again just because we want to keep this on our YouTube channel where we provide regular resources and support, as well as on our South Florida Anchor Alliance website. So good morning, everybody. My name is Megan Gamwell. I am the Director of Programs at the Health Foundation of South Florida. And I want to thank our Health Foundation leadership, Lorraine Chant, CEO and President, and Janice Shop, our Chief Strategy Officer, who unfortunately could not be here today because they are out in the community at a site visit. I also want to recognize our board chair, Mike DeLuca, who is joining us today. I'm not sure if he is in the call just yet, but when he does join, I do want to give him the opportunity to welcome the group and say hello. Mike is the CEO and chair of the Board Regional Health Planning Council. The Health Foundation is deeply committed to enhancing the health and well-being of our communities across South Florida, and access to capital is a critical component of fostering this economic inclusion and equity. I want to thank our anchor institutions and partners for breaking down county barriers and coming together to provide the essential resources and support for South Florida's business community. The South Florida Anchor Alliance is built on the belief that collaboration is key to promoting inclusive growth by reducing barriers to capital and supporting historically underserved entrepreneurs. This webinar exemplifies the power of collaboration between our anchor institutions in Miami-Dade and Broward County as they work together to foster economic growth by helping small businesses access the capital they need to thrive and expand. Through these efforts, the Alliance not only enhances business sustainability, but also drives job creation and strengthens community resilience across South Florida. With that, it's my pleasure to introduce our esteemed anchor members who are at the forefront of this initiative. From the City of Miami, we have Yadisa Calderon, Assistant Director of Procurement, and for Broward County, we have Anthea Pennant, Associate Vice President of Adult and Community Education. Today, they're going to guide us through our webinar. And with that, I turn it over to Yadisa.
Good morning, everyone. It is a pleasure to be here. Thank you, Megan. So the City of Miami is very proud to be part of the South Florida Anchor Alliance, especially in the context of today's Access to Capital webinar, because we want to make sure that the small businesses are able to thrive. Procurement isn't just about fairness, it's about enabling local businesses to gain the capital they need to expand and sustain their operations, small businesses such as yourselves. By working together as anchor institutions, we ensure that these procurement opportunities are accessible to all businesses, not just the large businesses, particularly those from historically unrepresented groups, helping them to ensure the capital they need to grow. So, Anthea, did you have anything you wanted to add to that?
Sure. Thank you, Yadisa.
You're welcome.
At Broward College, we understand the vital role that anchor institutions play. By participating in the South Florida Anchor Alliance, we are committed to creating pathways for small businesses to access the financial resources they need. And all small businesses need access to financial resources. This webinar is a key part of that effort as we aim to build capacity, provide essential resources, and prepare businesses to compete effectively, ensuring that they are well positioned to access capital and thrive in our local economy. We stand ready to support these businesses. So why does inclusive procurement matters? Inclusive procurement is, of course, essential because it ensures that all businesses, regardless of size or ownership, have the opportunity to participate in our economy, and it's crucial for them to access the capital they need. A diverse supply chain actually fosters innovation and supports the development of businesses that might otherwise be overlooked. By collaborating as part of the South Florida Anchor Alliance, we are making a concerted effort to drive economic equity and create sustainability, long-term impacts in our communities by enabling more businesses to gain access to the financial tools they need to succeed.
I agree. I agree, Anthea. I think that together, the City of Miami, Broward College, along with the other anchors and partners are committed to this mission. We want to make sure to see you thrive. As you can see on this slide, the logos of our anchor institutions represent the collective strength and commitment of our organizations across South Florida. Each of these institutions is dedicated to fostering an inclusive economy that not only supports local procurement, but also enhances access to capital for all small businesses such as yourselves. We are so excited to continue this journey and to see the tangible benefits that such financial empowerment brings to our region. So thank you for being here today. Anthea?
Oh boy, well, I tell you, thank you, Yudisa. I'm just so excited to introduce our next partner. Two experts who are pivotal in helping businesses navigate the world of finance and access to capital. First, we have J.R. McFarland, a small business development officer from the Urban League of Broward County, who will discuss the various lending options available to small businesses and how to navigate the financial landscape effectively. We will also hear from Fabian Estrada, Regional Vice President of Lending Ascendas, who will guide us through the essential steps businesses can take to determine their bankability and access to capital necessary for growth. Their insights are crucial as we delve deeper into how small businesses can secure the financial resources they need to thrive. If you have any questions, please type them in the chat and we will go over as many as we can at the end of our robust presentation. Small business owners, I present to you J.R. McFarland and Fabian Estrada.
Thank you very much. It's really a pleasure to be here and to talk about a little bit what are the conditions and what are the criteria that we are going to review when you as a business owner are going to apply for a business loan. Most of the time it's important to remind the idea about asking additional capital in order to grow our business or our enterprise, because we don't want to use all the money that we had been making during this year. And that's the reason it's very important to be sure that we have the documentation ready. Let's take a look to this slide, and we are going to review briefly about cash flow, credit history, working capital, collateral, and what is the documentation that the bank initially is going to ask. Let me tell you a little bit about the organization that I represent, that is Ascendus. This is a CDFI, a Community Development Financial Institution, similar to the Urban League, that we are more flexible. We could say that, and we are going to be the first step that probably you will take in order to become bankable. But anyway, you know that cash flow is king. So most of the time we need to be sure that whatever amount are you asking as a business loan, the cash flow is there in order for you to prove the idea that this commitment is going to be paid. Because remember, organizations like Urban League, like Ascendus, we are mission-based. We are not helping business owners that they are probably not having an idea. The person you're... I'm sorry. There is some, oh no, okay. I thought that it was a question. But in reference of the CDFIs, we have to say that we are mission-based. We are not here just to make, you know, a nice client story. We want for you to really thrive into this economy. And that's the reason cash flow is the amount of money that we are going to count that you have fixed expenses as business owner. We know that you have to pay salaries, probably a rent, or if you are working from home, anyway, you have to pay for service. That is the type of expenses that we are going to count. That is the money that is going to be or has to be ready every single month in order to pay for those expenses and have some money left. And that money that is going to be left is indicating the ability for you to repay a business loan. So much information is coming. Our friend here is going to go into detail other type of items. But before doing that, the last thing that I'm going to remind you with the cash flow is the credit history. Credit history is really very important for you to evaluate because there is a personal guarantee. It's going to take some time, a long time probably, where you may have different credit.
Does not have a voicemail box set up yet.
Okay. If you could mute your microphone, it will be good in order to be sure that we continue because it's very important information about credit. What we are seeing here is how the credit is going to be affecting in reference of the different type of account that you will have, revolving account, installment account, revolving account, always the credit cards, installment account, car, auto loan, student loans, mortgage, and how we are going to measure with the time you had been building this credit history, that is the 10% that is going to make the score stronger or maybe weak, and also the amount of money that you own. Most of the time is the rule or the golden rule to have at least 30% of those credit card in use, and then you will be seen as a very, a strong candidate to apply for a business loan, for your mortgage, for your car. So always try to get that information in reference of your credit. Remember that there are a lot of places where you could get your free credit report. Most of the credit card that you use as consumer, it will be giving you a score. And I'm pretty sure that we will have another conversation, another meeting to go over the business score. But Shay, the floor is yours right now, I guess.
Thank you so much. And I'm certainly appreciative of this opportunity to get in front of you guys today to talk about lending options. Thanks for the introduction, Anthea. Again, my name is J.R. McFarling, and I'm the Small Business Development Officer here at the Urban League of Broward County. And a big part of our mission through our CDFI is to get money into the hands of deserving business owners who are underserved and unable to get a traditional bank loan at the moment. And the first slide that you see here, it says, by understanding the lending landscape, you can make an informed decision. And one of the things that we come across on a regular basis from a lot of individuals that apply for loans is some of them have already made some bad judgments or bad decisions in terms of taking the wrong loan that doesn't necessarily line up with their job, with their organization and the mission of their company. And in other instances, they're just mismanaging their debt. And so the purpose really is to make sure that everyone has a full understanding of all that's needed to make that decision. And we'll share with you a few options that are out there that are probably a little bit more popular, but also just to kind of share the pros and cons of them. Next slide, please. And so as we look through the slides, you'll see that there are choices. There's so many different options out there for a small business to select that it's often daunting. It's confusing. And we also will talk to a lot of business owners saying, hey, I was approached by this particular organization or this situation. What do you think? And we'll give them our honest opinion on it in terms of whether it's something that they should pursue based on their current state with their business, or whether it'll put them in dire straits down the line and unfortunately choke off any cash flow that they may have. So next slide, please. We'll go through all of these and hopefully carve out some space for you so that you can make informed decisions. The low-hanging fruit for everyone really is just going after the traditional bank loan. If you are able to secure a traditional bank loan, that means you have established a banking relationship. That means your credit score is likely 740 and up. It means that you don't have any you don't have any defaults or any judgments or anything on your credit profile, and also that you've not made any you've not overextended yourself with regards to other debt, and particularly some of the predatory or the high interest loans that are out there. So the traditional bank loan is the way to go. And as a CDFI, whether it's through us or Ascendus, you'll find that our goal really is to position you for banking with a traditional bank. We don't want to hold on to you forever. So the information and the insight that we share helps to pave the way for that. Next slide, please. When you look at the benefits of a traditional loan versus the disadvantages, I tend to focus on the benefits of it. So you get the lower interest rates. You just heard the other day that they're cutting the interest rates a 0.5 point, which is going to be significant for traditional bank loans. And it may make a difference in a lot of cases for a lot of small business owners. You may have a longer prepayment term, and you also will have the opportunity to establish a really strong, deep relationship with the bank. The disadvantages, they tend to be stringent in their eligibility criteria, and especially with regards to the number of years you have a relationship with them. Typically, it's 24 months, so it might be a little stringent, and not everyone can essentially go forward and get a traditional bank loan right out the gate. However, if you work with organizations like us, we will prepare you for that so that when that time comes, you'll be well equipped. Next slide, please. SBA loans is another low-hanging fruit that a lot of individuals will position themselves for. And, this is an incredibly popular loan program that's available nationally. And one of the biggest benefits of the SBA loan really is I would say the low payments. And that happens because your repayment window can extend out 15, 20 years. And that makes it a tremendous opportunity for individuals. If you have a repayment that's that far out, you can do other things with your business. But the flip side of that is some individuals don't want to be locked into a loan that long. So you just have to make that informed decision and determine what are the non-negotiables for you as you pursue this additional capital so you can be better financially leveraged with your business. And does it make sense to have a loan that long? But other than that, they have tremendous programs. Next slide, please. They have tremendous programs that are available for you, low to minimal down payment. And I would say that the only thing really is the other thing is the process, the application process. It can be a little heavy, similar to a traditional lender, a traditional bank. It can be a little heavy. However, sometimes the juice is worth the squeeze, and this might be one of those moments where, as an entrepreneur, as a business owner, you are positioning yourself for greatness, and this helps put you on that trajectory. Next slide, please. Crowdfunding is another solution, or another option out there, and there are a few out there. There's one in particular I would mention, which is known as Kiva, K-I-V-A, V like Victor, A. And that is a crowdfunding solution that's available. Key facts about crowdfunding is the amount of time it takes to raise the money, and typically it's 30 to 40 days. But if you look at a traditional loan, sometimes it takes 30 to 40 days just to underwrite a file. So I think it's one in six or a half dozen or a dozen. It's one and the same. The average donation, however, and some of the other challenges that you may have is raising enough capital, enough revenue that you might need for your business. But the perks are there. You don't necessarily have to go through a lot of underwriting to secure the funding. It's essentially just raising the funding. Next slide, please. And they're not necessarily subject to any regulatory compliant scenarios or anything like that. The benefits, obviously, you access capital without equity dilution, so you don't have to worry about collateral or anything like that. Validation or engagement with backers or funders, you have that. These are individuals that come together to say, hey, I want to support JR's business. I want to contribute towards the amount of money he's trying to raise for this loan. Some of the disadvantages that we've noted here, these are the high level ones, which is, it's high competition. You've got thousands vying for the funding from an investor. So it can be a little diluted down. It's time intensive. So you've got to do a lot of campaigning, a lot of raising of the funds, and the ultimate risk here really is just not meeting that goal. So you could say, I need to raise $100,000, but maybe you can only corral $75,000. So those are some of the risks with it, but it does afford and it does allow another opportunity, another avenue for an individual to secure funding. Next slide, please. Factoring. A lot of individuals who are dealing with cash flow issues will go into this particular scenario. If you're on the call and you have a factoring, you likely meet that definition that I just said. it's not necessarily the kiss of death. It's not a bad thing. It's just, I think an element of running a business. Sometimes you don't have a choice but to get into a particular scenario. So I think raising awareness around this helps. And depending on the industry, you'll have individuals. Individuals who are looking for immediate cash flow, maybe they've got a crunch, maybe they have ideas that you got slow payers, and that's probably the single biggest reason for an individual to go into factoring is just they're not getting their money fast enough. And they've got a lot of contracts, they've got a lot of agreements. You could see when you look at the documentation that they have a lot going on. They're just not receiving the cash fast enough. And so this allows them the opportunity to take advantage of that, continue to run their business and go forward. Next slide, please. Some of the benefits, it's an improved cash flow. First off the bat, access to capital and outstanding credit management, because you're not necessarily, you're paying future to receive the money today. In other words, you're selling your inventory. So you're able to do that and not necessarily go with collateral and so forth. There is a higher cost. Most certainly, you'll find a lot of these institutions or organizations that offer this. The interest rates on these are really, really high. You have a lot less control over your inventory as a result, because essentially you're just handing it over. And there's a perception by any financial institution or someone looking at the business, the perception really is that, if you have a factoring setup, that means there's instability with regards to your financials. And it could be perceived by your customers. So be leery of that if you are going down this route. Next slide, please. There's merchant cash advances. These are probably very popular with restaurants, those who do a lot of batching out on a day-to-day basis. And it has its perks. I would say the only perk really is the fact that you pay proportionately to what you bring in. That works in restaurants where, you have a couple of days a week where it's slower, and then you hit Thursday, Friday, Saturday, and maybe even Sunday where you're slammed, everything is busy. You've got a lot of transactions going on, and you pay proportionately. So if you're paying 15% or 20% on your daily batch, it's going to be proportional. The downside of that is what happens when you have a great weekend. It's also towards the back end of the month. You need the excess cash because you've got to meet payroll. You've got some other things that's happening that you need the cash flow for. Well, that 20% is gone before you even see the money hit your bank account. So you want to be leery about this. In some instances, you don't have a choice, but you want to be leery of it. Next slide, please. And you want to certainly pay close attention to what is transacting or what is happening with that. It's, the disadvantage here really is a higher cost, certainly the impact on cash flow, which I just pointed out, and the potential to end up in a debt cycle. And one of the things that we preach here at the Entrepreneurship Center is we really don't want our small businesses in a debt cycle. I call it the banana peel. We throw a lifeline and we want to pull you off of that banana peel so that you can get yourself on solid footing so that you can grow your business and build that legacy. And sometimes when you have certain scenarios, it makes it difficult to do that. While it might be quick to get the money, you got to think, is the juice worth the squeeze? Next slide, please. Now, business credit cards is a great way on two fronts to build business credit, but also it's a way for you to gain access to any money you may need. I would say never ever use a business credit card for cash on your business, because the interest rates on that cash that you take is going to be exponential. It's going to be a lot of money. But I have this here showing you because it is a tremendous way to build business credit and additionally to establish a banking relationship. Many institutions out there have different special programs that you're able to get into. You can establish a point system with them. And most importantly is you start to get the traction with them as a reputable, as a strong business. So when you raise your hand down the line because you need $200,000 or $500,000, they're going to say, hey, you know what? I've worked with this person for a long time. I understand their business. I believe in them. And you're able to meet certain criteria to receive funding. Next slide, please. Now, some of the disadvantages I mentioned, higher interest rates. If you take cash, yes, it will be high. And additionally, you will run the risk of overspending or spending more than you need to do. That probably goes into the line of credit scenario as well, but you certainly don't want to do that. And you want to make certain that you're doing that. You can go ahead, next slide, please. The other solution here is contract financing. And so we've got a contract capital product over here, but in the spirit of this conversation with the group that we have, you know, many of you may secure a contract and you need to go out right away and secure equipment, machinery. Maybe you need to come up with cash because you need to hire 5 new staff members to fulfill the need or meet the needs of that contract. And so contract financing is a very effective way to secure funding. Oftentimes, the lender will have specialized programs that puts you in a favorable position for that. For example, with us, we've got a contract capital product up to $50,000, 2.5% interest rate. You'd be hard pressed to find that, but it exists. So if there's a need for contract financing and you're able to enter into a third-party agreement with the prime on that contract, you can certainly take advantage of this. And this allows you a tremendous opportunity to do that and scale your business. Next slide, please. And some of the advantages here, again, access to immediate cash flow, pursuing new opportunities, that would be by way of the contracts you have, no additional debt or equity dilution. So with the third-party agreement, then you would not have to necessarily worry about any type of collateral. The disadvantage is it may incur higher interest rates. I shared with you our interest rate, and it depends on what's out there, but certainly do your research on that. And then depending on the credit worthiness of the individual, we may be able to go forward with the 50,000, 2.5%, or we can look at other solutions. But just to let you know that there is an opportunity for you to take advantage of that, and especially if you have contracts. Next slide, please. CDFIs, there's 2 on the call today, so I will talk really quick about the purpose of a CDFI, really. And it's targeting our job really is to service and focus on the underserved, the disenfranchised, the marginalized community, and those who are entrepreneurial spirits within those areas. We want to get you the funds that you need to get your business going. With 90% of businesses failing within the first 12 months, that's a staggering stat. And most importantly is that the individuals who, if you stretch that out over 24 months, that number is still very high. It's closer to 75%. The state of Florida, I'm not sure if you know, is #1 in the country for entrepreneurs establishing a business. We are #1 in the country. But if you look at the number of businesses that fail within their first 2 years, Florida is also ranked #1, unfortunately. And the biggest thing that individuals are trying to overcome is the cash, the working capital, the money needed to get that business funding and get it off the ground. And so CDFIs, our primary goal really is to help you accomplish that. Next slide, please. Is to help you get to the point where you can take advantage of that. And there are clear advantages for having a CDFI, obviously accessing the funds, personalized support and guidance. Many of the business owners that we've worked with to provide funding, we actually have a very strong relationship with them. We know them. They've participated in our programs. We've gone to support their storefront, their brick and mortar for activities and so forth. So we have a very good relationship with them, and we feel confident when we make that decision to give them the funding. The disadvantage of a CDFI really is just that in some instances, because of the lack of credit history, and or in some instances, individuals may already have a few positions from a predatory file or a lender or so forth. Maybe you have a couple of delinquencies. Those things, while it doesn't shut us down from going forward with you, it does allow us to underwrite your file and look at it. And in some instances, while the rates are still going to be better than what you're going to get at a predatory lender, it could end up being a little bit on the high side. I've given you our range for the contract capital product. Outside of that, our range on our loan funds are anywhere from 3% to 9%. And you heard that the Feds just cut the interest rate. So I think it's going to be in line with that. And it's still a better scenario than what you might find. So be leery of that. Next slide, please. Be leery of the loan and the predatory lendings. Now, our product features is Florida, state of Florida, $10,000 to $250,000. It's our funding range. The range on the interest rate, it'll vary depending on your risk profile, but it's anywhere again between 3% and 9%. If it's six-figure or up, collateral is required, and you will, in some instances, be responsible for loan closing expenses, i.e., application fee, origination fee, legal fees, so forth. Next slide, please. This checklist here, I want to show it to you for transparency, okay? So any of you who are positioning or aspire to be a strong business in the community with longevity and a firm legacy, these documents that you see listed here are documents that you, A, should be familiar with, and B, and most importantly, start to establish within your business. The assumption is you have a banking account. You're not commingling your personal and your business assets, okay? You are filing business tax returns. Your financial documents. If you don't have financial projection, financial projection, P&L balance sheet, even a debt schedule, if you don't have that, then how do you know what's going on with your business? When somebody says, how are things going? And you say, things are great. Are they really going great? And how do you know that? Well, putting your financials in order, having your documents properly structured, tells you the answer to that. It also is a great snapshot for you to know where you need help with your business, okay? Having a sound business plan, the resume, and the resume is not necessary unless, again, a six-figure file, and depending on the loan committee, that might be required, but not necessarily. The credit release form is only in the event that your file is viable and we're going to fund it, we would ask for that. Otherwise, we don't pull your credit. There's no inquiry that goes into your file as a result of that. Next slide, please. And then I'll just wrap with a couple of case studies here, just so you can get visuals for those of you who want to see numbers. If you were to secure a fund with us, let's say the contract capital product, and you maxed out the $250,000, you would have a payment of $1,443, okay? A typical loan calculator could have done this as well, but we just wanted to put the visual up there, okay? Now, from our standpoint, your credit score is not the end all. So we don't have a 720 score or up. Anything under, we don't work with you. We've worked with individuals with a 600 score. Your score tells a story. There's a story behind it, and we want to know what that story is. And understanding the story, we can position your file. So this is just a quick snapshot of what a contract capital repayment could look like. Next slide, please. For you. And then the other one is, and we come across this a lot, individuals that have high interest debt. They're paying a lot of money. And the scenario we have here is an individual that has, decent credit score, but they're saddled with two high interest loans, one at 26%, one at 22%. Monthly payment on one is $1,346, on the other one it's $1,100. They're paying a total of $2,455 a month. If approved through our product, you can secure, let's say you went for $100,000 because you wanted some working capital. You could take that $100,000, pay off those two high interest loans, get your loan payment to be $2,324, so just slightly less than what you were paying, but most importantly, also secure an additional $59,000 in working capital. So you have a tremendous opportunity in some instances, and again, it's case by case scenario. But we do have funds set aside, and the funder allows us to use it to pay off certain high interest debt. So if that's you, we'd love to talk to you. Next slide, please. And then talking to predatory lenders, and I touched on this in nuance in certain sections throughout my dialogue here, but really it's just being smart, being judicious, avoiding unreputable institutions that are out there. Take your time. Don't make any knee-jerk reactions. If you have any questions, you can reach out to us. You can reach out to Ascendus. You can reach out to any of the community partners that you know has your best interests at heart and say, hey, I was approached by this particular scenario. What do you think? And then also If they can't share with you what the interest rates are, if you feel like you're being pressured to any great degree, chances are it's predatory, and you want to be leery of that. And I just wanted to make sure that you guys are equipped, or at least have some things that you can look for on that. But really, it just comes down to just exercising good judgment and asking a ton of questions. That's how you can avoid the debt cycle and the debt trap that many individuals unfortunately fall into on a regular basis. Next slide. And if you're interested, we do have a pre-screening tool. It doesn't do any kind of inquiry into your credit profile. It is a QR code that you see on the screen. If you scan that and wanted to know for your small business how much you might pre-qualify for, this is all based on the information you provide. So if you know factually what your numbers are and you plug them in there, I think it's like 5 or 6 or 7 questions it's going to ask you. It's going to give you a number. If you want to go forward, then you can reach out to us. We can connect you with our loan team, and we can go forward. So this is a tremendous tool just for you to help you know where you're at right now, and whether you could potentially secure funding and what that might look like. I also think it's a great peace of mind. And I think that ends my comments, and then we'll take questions after the presentation.
Fabiana, I don't know if you'd like to chime in a little bit just to wrap it up before you turn it over to Santi.
It was everything that we have to see when we are trying to work with a small business owner, that they are prepared and they know what is the purpose of the loan and everything that they have in mind in order to escalate the business. So thank you very much for that. And Santi?
Yeah, excellent. Santander Arguelles, Chief Program Officer of the Alipata CDC, and thank you, Fabiana and JR. So it was a great information about the readiness, because it's all about the access to capital readiness that they have to have for these options. So I come from Alipata CDC, so we're an economic development agency that provides support to the small and micro businesses in the area of Alipata, and we're focused on these businesses that need to access to capital. Next slide, please. So that's our vision, focusing on these businesses. So after all the explanation that Fabiana and JR mentioned, so I wanted to talk about the ABLE loan, which is a special product that is going to be available for a limited time, and is a part of the ongoing effort from the Miami Foundation and the Wells Fargo Miami Open for Business program. So this is the asset building loan for entrepreneurs, and the goal for this loan is basically to provide a low interest financing for historically undeserved minority-led nonprofit and small businesses. So we can see here is up to $100,000. The interest rate is 3%, and it's going to be for limited time. So applications are available only until October 15, 2024. And as JR mentioned, there is very important to have that credit when you go to a traditional bank. And also Fabiana mentioned that, CDFIs might be able to work with you in certain scenarios. And that's exactly what this loan is for. So for those that might have certain limitations when it comes to the credit, when it comes to the project, they might need, to look at the holistic approach of the project or the purpose they're trying to finance. So this is a perfect option, and it's also a 3% loan, which is unprecedented to have, 3% these days. Next slide, please. So let's see the documentation that you need to apply for. And the way they divide the program is in 3 brackets. So we have documentation required if it's less than 10,000, more than 25, or up to $100,000. So let's see, the information will vary on the next slide. So let's have a view here. So if it's up to 10,000, we're going to need a tax return, a business tax return as well, actual cash flow and financial projections, and the bank statement for 3 months. In the event that you need to go up to $25,000, so in addition to what we just mentioned, we're going to need balance sheet, current year's budget, Social Security, and the personal financial statement. And the same information if you wanted to go up to $100,000, but with a 24 months of business bank statement. So as you can see, it's not difficult to qualify for this one. it's a very good option. And let's see more information in the next slide about the ways that we can use it. So this is going to be available for small businesses and nonprofit based in the Miami-Dade County. And the good thing is that the business can have a revenue up to $3 million. And the other requirement, it will have to be in operation for at least 2 years. So next slide. And what can I use this one for? We're talking about some procurement options. And sometimes to fulfill that contract, we might need to buy a vehicle, we might have to remodel or renovate the place that we're working from, or we might need an inventory. So all these cases and scenarios can be available for this one. And to find out more information where to apply, you can QR right here, or you can go directly to the miamiopenforbusiness.org, and you will see different options there, but the one that is available right now is the ABLE loan. And without further ado, I'm going to transfer to Yandy Gilson, Senior Director of the Employment Solutions at Broward College.
So good afternoon, everyone. So the South Florida Anchor Alliance, a small business capacity program, is a collaborative initiative designed to empower local small businesses by providing strategic support and resources. Yes. In partnership with Broward College, the SBDC of Broward County, and Prospera of Miami-Dade County, the program focuses on fostering business growth and sustainability. It helps businesses better prepared to work with anchor agencies, bid on government contracts, and build organizational capacity. By enhancing these skills, the program strengthens the region economy development, enabling small businesses to expand their network, build capacity, and create opportunities within the local economy. Next. So here is our process flow for the Small Business Capacity Program for our businesses that come through the program. So the first phase is completing the readiness assessment, which I'm going to go a little bit more into it. But the readiness assessment really is to prepare, is to see your level of readiness when it comes to doing businesses with these particular anchors. The second step is the first and second step is together. So the first is completing it. The second step is really diving into the information that you provide and assessing your level of readiness. The third step is for us to then connect you to our resource partners, which could be SBDC of Broward if you are in the Broward County area, or it could be Prospera if you are in the Miami-Dade area. And these partners are the ones that connect the businesses to the resources that are available that is relevant to the business needs. And of course, the final phase is really to build capacity, build your readiness, and be able to apply for these government contract opportunities. So just a little bit more information about the program. So we launched in March of 2023, and the Small Business Capacity Program is already making some waves. So nearly about 170 businesses have completed the initial assessment. This is marking the first step in transforming their readiness to engage with anchor agencies. So the exciting journey really begins with completing the assessment and determining the level of readiness that range from not ready all the way up to ready now. With the support of the dedicated partners that we have with SBDC and Prospera, businesses are connected with the relevant resources based on the needs from the assessment, helping them build capacity and unlocking their full potential. So many have already progressed from not ready at all to ready now. Some was ready soon, now they're ready now. And this really have poised them, giving them the opportunity to start applying for contract opportunities and really to elevate their success at the end of the day. And the goal for the small business capacity is really to elevate the business readiness for engaging with anchor agencies and help them successfully bid on government contract. So by completing the first step, which is the business assessment, small businesses like yourself will gain valuable insight into your company's strength and areas of opportunities. These assessment is really key to unlocking the tailored support and resources that is available to you all, and to really position the business for long-term success. So we ask that after this slide, we do have a QR code that we ask to please take the opportunity, connect with us by taking your phone out and being able to scan the code. You will have access to our short assessment. Take the time to complete the assessment. And once you complete it, one of our staff will reach out to you so we can start on this wonderful journey together. So thank you all.
Great. All right, wonderful. Thank you so much, everyone, for joining us today. And thank you so much to our incredible speakers who have really shown the power that we have in the region by working together collaboratively to provide access and resources to our small business community. After today's webinar, we're going to make sure that all of these resources are provided to you on our South Florida Anchor Alliance.org website, where you can find other tools and resources and information about any other upcoming webinars that we have. And if you're not currently signed up for our emailing list, please make sure to do that as well. You can do that via our website. I also want to recognize our board chair today, who's joined us in support of this work and who has been a champion of the South Florida Anchor Alliance, Mike DeLuca. He's also the CEO and president of the Broward Health Planning Council. Mike, would you like to say a few words to the group?
Sure, Megan. I just want to first, I want to thank you because you're the rock star in this endeavor here. And I just want to thank everybody else. Great presentations, and for everybody being involved in it. And being somebody who comes from South Florida, it's so exciting when you see this kind of work going on. So I thank all of you, and especially you, Megan. Back to you.
Great. Thank you so much. I hope everyone has really gathered some great tips and information today. I do want to allow Yadisa and Anthea to share any other closing comments. I know we have some other really helpful QR codes available. So Yadisa, Anthea?
Anthea, you want to go, or do you want me to?
You can go ahead.
Yeah, so we encourage everyone to take the opportunity to take advantage of these capital that's available to them, and make sure that you're participating in the South Florida Anchor Alliance information, so that you can also have access to us. So when these procurement opportunities become available, you can participate. Don't be afraid. Just take the step and take the plunge, like we all say. You never know what comes out of it. So we look forward to working with each and every one of you, and good luck. Thank you, everybody.
I just want to say there's just never been a better time to be a business owner here in South Florida. You have so much support. All of these anchor institutions literally wrapping their arms around you to make sure that you are successful in your efforts to access government bids. And I can assure you, it is a solid business strategy. When you access a government contract, you are on a solid path to strengthening your business. But of course, there's always the need for funding. And so that is why a seminar, a workshop such as this is invaluable, because if you get that big contract today and you don't have the resources to help you move yourself into readiness to do the contract, chances are you will not succeed. So we stand ready, all of us here, wanting to support your efforts to be a successful business. And so just do everything that you heard from our presenters earlier, and I promise you, you will be successful. I have faith in you. We all do. Have an amazing rest of your day.
Thank you, everyone. Have a wonderful day.
Thanks, everyone.